Hey traders, Nick Shaheen here looking at Palantir. A bad day for Palantir, I bet. Let me see here. Yeah, it kind of like fell apart late in the day. It was started out rough, got a lot better, then went back to rough and got rougher. The rougher part we kind of saw in the chat room. I casually said, it was a funny joke actually. Somebody that did it on me, I didn't do it. I mentioned um, triggered a bearish pattern. It's going to lose about 50 cents, and somebody shushed me in there because I had just shushed somebody else. So anyway, it was funny interaction. So not taking any new subscribers right now into my chat room because I'm at capacity and keeping it fun. It's close to 300 in there. So let's see here. Talking about the price action, it's somewhat predictable, which is good. This is a good company with good fundamentals and a good team that represents itself well. They are growing the business. If we look at the billing is consistently, let's see here, trailing 12 months is 1.2 billion, up from a billion last year, 750 and 600. So consistent. They still spend a lot, but I won't ask them to be profitable when they're trying to grow. Statistically, it's not cheap, but it's not like egregiously expensive. Big word. So 34 times sales is not cheap, but it's like 10 points, maybe 9 points more than Tesla. It's not a Tesla. I'm just giving you a hard comparison. So they can grow into it. That's not a reason. Valuation is not a reason to get out of it. That's what I'm trying to say. All right. So back to price action. This little caveat, this is somewhat of a Reddit stock. So when the meme stocks are rallying, which means the small caps are rallying, which means the XRT is rallying, all these are connected. Weirdest thing. So when you see AMC, GME running, Clover running, this one runs too. And the bad thing is when they're falling, this one falls too. The good thing is that this would be a knife I would catch with both hands almost blindly when it's falling. So it opens opportunities. I have done it over and over again. In fact, just today I closed the credit put spread in it, which is a bullish position that played out. I paid, I think, 3 cents to close it, and I had collected a lot more to open it. That's how credit spreads work. You sell something, it gets cheaper, you buy it back cheaper. So I sell a put, and then the stock doesn't fall, and the put dies. The buyer, the put loses money. I make money. Base could be to swing up, also could be. Now there is a lot of resistance in the way just from the charts. That orange line represents the busy spot of trading. Both people love it. No thanks. Both sides of the aisle love it, buyers and sellers. And so it will be congestion. Also, it's a ledge. See that big red candle right there? So they fell here, they thought about it, and then they took a leg down. Was this Monday? I don't know. July 7th. No, it's definitely not Monday. So it's got volume going against it. It's got levels going against it, but it can do it. However, it will need the help of the market. So if the markets decide to take a pause a little bit, this will not find footing. And if this triggers, I think it's going down to 18, which I don't pray for it, but if it does happen, I'll get long again. And if you lose that, we're going back to this base. What? You just said you loved it. Hey, I don't drive Wall Street. There are idiots out there. So trade the action, not the emotions. So if this is lost, this should be support. If it's lost, it will bring this. This is stronger support. If it's lost, it would bring a great opportunity. So what am I saying? I wouldn't go in with both feet. I wouldn't go all in on every little dip. And the dip here will look like, oh my gosh, I just bought it and it's now 3% cheaper. That's not a big enough dip for me to double down. I need like 20% cheaper and time to pass. Like if I bought it 2 days ago and today it dipped 3%, I don't jump in and say I'm going to add. Nothing has changed from 2 days ago to now. I'm using these as examples. So good price action potential, swing back up, strong resistance in the way. So if I were to be a betting, what is this? Pinterest. That's tradable tomorrow, by the way. It's falling out of bed. Okay, so I will assume this is support 1. As I said, this is support 2. And this will be the major entry point. This is an entry point. This is an entry point. So this entry point will come with a tight stop, meaning if it goes below here, I'm out, because I'll do that same thing over again here. This bounce is going to find resistance. Hopefully the bulls are able to maintain some sort of a control trend, come back and try to hit it. It's not a hard line in the sense it's a zone, right? And if they jump above it, they come back, and the real breakout line is right here. So this is R for resistance. This is R for resistance. Go above here, they come back, test it for footing, off to the races. So this one will have a lot of leg on it. And this whole cluster is kind of the mess from GME. I wish this has never happened. I've said it before. This ruined the momentum they had. Look at this nice base they had going, and then they took everything in 1 day or 2 days or 3 days. That was just bad. But it's taking a long time to recover and put it in the rearview mirror. Now, conversely, if they lose this, they'll come back, try to save it. Maybe they will, maybe they won't. They'll bounce here, come back. And if they lose this, same thing. So entry point, tight stop. Entry point, definitely tight stop. Re-entry point, enforce, no stop. Stay in it. That's my strategy. If I get long here, anticipating the swing up, I should know that it will face resistance. So it may hit here and come back down. As long as it maintains higher progress, it's not necessarily a straight line, but progress. Like, you don't want to see it come back lower than this candle, for example. It's just dejecting. And then see what how it handles and how it approaches this. I would book profits here. I would lighten up on profits here, and if I buy it here, so then I would re-engage higher or leave runners. How does that happen? So we can have a little lesson at that, little miniature lesson. But the details will be for members, which would be, if I own a call, if I bought a call, if I bought stock, and I want to lock some profits, and because the price went my way, I don't have to get out of it. Of course I can. If I bought 10 calls, I can sell 1 or 2 or 3 or 4 to get the house money out, and play with house money, I should say, get the profits out. But I could sell a call against it, and even higher. So leave room. Then that becomes a diagonal. Or if I sell it at the same level, it'll be a call calendar. I can't imagine that will work. But if I own shares, I can sell covered calls against those. Plenty of things we can do to lock profits. So again, I'm not telling anyone how to trade. This is definitely not a trade recommendation. In fact, I offered both arguments for a drop and a rally. So clearly I'm not giving advice here. I'm just telling you what I can see, the price action, how I can see it unfolding. Of course, now it looks pretty busy, but I started it. Well, here, let me put 2 lines to watch then, 2 zones, this one and this one. So you can argue, the bearish person would say, it fell, consolidating, it's going to fall again. So the trigger would be, if it goes below this one, they're going to short it to get to here. And then hopefully this will hold, otherwise it's going lower. So that's the bearish person. The bullish person will say it fell, it double bottomed, kind of, and now it's working its way back up. So which one is right? Look, if we do this, that's like a nice bowl and a nice handle to it. The break above that will be this upside potential. So now we're looking, whoops, sorry, from here on up. So eyeball somewhere around here. So now we're looking, saying the same thing, drawing the different lines, but one thing is consistent. The necklines are the same. That's a neckline. That's a neckline. That's a neckline, and that's a zone, the most important zone. Why is it the most important? Because that's what the action said. That's the most important zone. Look, most volume. What is this? These are volume bars. These volume bars, see how it's high up here? Well, this tells me that on that day, volume is high. How does that help? It doesn't. This orange line tells me that at 2470, the volume is really high. That's useful information. All right, so if you want to learn something, go learn volume profile. That's the study. That's the only study I have here, really. The regression line is just for visual representation. The rest is all hand-drawn stuff. Look, all these are hand-drawn. And I leave lines. Oh, check this out. That's why I leave lines. Look at this little pivot line from May. Okay, so if from May, this level was important, and I'm going to do one thing here. I'm going to extend it to 250. Nope, went the wrong way. There we go. See it? I just extended the line over, and it was the base that was lost, resistance, and now they're dealing with it. So even from back then, and if you look left, it's this one, it's this one. So if you don't believe in charts, and if things like that don't make you believe that they mean something, I think you're choosing to leave a good tool out of your toolbox. It's okay if you're successful, but why wouldn't anyone add another tool to the toolbox? I did. I was never a charts guy. I was strictly fundamental, but now I don't do anything without charts, but I'm still a fundamental trader. In other words, what did I say first about this company? How do I confidently buy the dip? Not because the chart looks good and because it hit a target, because the company represents itself well for the future. I would never do this in QS, for example, which still hasn't had a business. It's trying to establish something that's impossible to do. So just to use one, not to pick on it. Or Hyliion, or Nikola. All right, Nick signing out.